Hello and welcome to Spy Trader, your go-to financial news podcast for the latest on the S&P 500 index. I'm your host, Benny Bucks. It's 12 p.m. on September 4th, 2024. Let's dive in. First up, U.S. stocks fell on Wednesday. S&P 500 by over 0.2%, Nasdaq Composite by more than 0.3%, and the Dow Jones Industrial Average by around 0.1%. Concerns over economic growth and tech stock turbulence, particularly Nvidia, triggered this downturn. Nvidia shares dropped over 1% due to intensified antitrust scrutiny, with its market value plummeting by $279 billion. This raises questions about the AI boom sustaining stock gains. On labor markets, job openings dropped to 7.67 million in July, the lowest since January 2021, stirring expectations for potential Federal Reserve interest rate cuts. The chances of a 50 basis point cut at the next meeting surged to nearly 50%. Meanwhile, the two-year Treasury yield dipped to 3.79%, the lowest of 2024, signaling economic growth concerns. Given September's historical volatility, brace for continued market fluctuations. What does this mean for investors? 1. If you're invested heavily in tech, especially Nvidia, consider diversifying to mitigate risks tied to AI sector sustainability. 2. Potential interest rate cuts could benefit growth stocks, particularly in tech, by lowering borrowing costs and boosting earnings outlook. 3. The cooling labor market could influence favorable interest rate policies, but also raise broader economic growth concerns. Monitor employment data closely. 4. Prepare for September volatility. Consider hedging strategies or higher cash reserves to navigate downturns. Now, trading recommendations. 1. Reduce exposure to tech stocks like Nvidia if heavily concentrated. Diversify across other sectors. 2. Look at growth stocks that might benefit from interest rate cuts, particularly in tech and consumer discretionary sectors. 3. Monitor Treasury yields. Falling yields could indicate rising economic concerns, impacting market sentiment and stock prices. 4. Given September's volatility, consider conservative or defensive plays in sectors like consumer staples, healthcare, or utilities. In conclusion, the S&P 500 is at a crossroads influenced by tech stocks and interest rate expectations. Stay informed, vigilant, and prepared for market swings. That's all for today on Spy Trader. I'm Benny Bucks. Stay savvy, stay cozy, and happy trading. Join us again in a few hours for the latest updates.